Go through my moving average crossover trend following system. I'm just going to do a quick demonstration of how I would take the trade in the event that the market breaks upwards or downwards in either direction. I'm going to use Forex Tester 3 with Windows Parallel. Okay, so I've got two moving averages in place. I've got the 50 period and the 150 period simple moving average. The rules are I'm going to look for a crossover and I'm going to buy, well, I'm going to look to buy in that direction. So we'd look for a crossover and then a retracement in the price before we got in the entry. If you want the full rules to the system, follow the link below to my blog. I've included it in the description. And let's see how this pans out. So this is the euro dollar. I only ever trade this on the daily time frame. So here's a good example of the moving average crossover. Price has started to retrace here. I'm going to be looking for, in this case, a bullish confirmation candle before I decide to take the trade. It's going to be just below the last swing low. Okay, as you can see, price has taken off in our direction. What I'm going to do now is look to add to the position, but only once price has started to pull back and we get another bullish confirmation. Like so. What I would do now is add to the position, stop loss just below the last swing low. I move the last trade stop loss to break even. And let's see how it pans out. Okay, price has taken off again in our direction. I will look to add to the position just one final time if price retraces and we get another bullish confirmation candle. Like so. Stop loss again just below the last swing. The last trade we took, we moved to break even, and we can move this stop loss. We'll trail the stop losses just below the last swing lows. Okay, so price has taken off a little bit in our direction. I'm not going to add to this position again, even though it is consolidating. I don't add to the position more than twice after the initial trade. And we're off. Some nice movement. Price begins to consolidate again. In this case, because the last breakout of a consolidation was here, my stop losses I would trail now to just below this swing. And in this case, now that it's broken out from this consolidation, I would move them just to below this swing. I'll actually do that now. And we've been stopped out for 3 profitable trades. The market is very much still in an upwards trend. I wouldn't rule out getting back into this trade, but what I would look for before doing so is a breakout to the upside. We can see a bit of a trend line or a resistance point forming here. I would use that as my next entry. Like so. So I would enter the trade here with a stop loss just below the last swing low, and then I would be back in the market. I'm not going to repeat the whole process again, but I would pretty much follow the same process as we followed here. This is a trend following system. So what you can expect from that is basically during the periods of sideways market movement, you will be taking a number of small losses. Using a trend following system just means that when the market does actually begin to trend, you really capitalize on it, and catching one good trade like this more than makes up for a number of small losses during sideways market periods. If you want to know the full rules to my system, then please visit the link below in the description. I have tested this system over 10 years worth of data on the euro dollar. So if you want to know the results, the percentage chance of a probability, percentage chance of a loss, and the win to loss ratio in terms of returns, then again follow the link below and all the information is there.